Hey guys, please hear me clearly. The worst time to learn how to trade is when you're in a crisis, like being laid off. The best time to learn how to trade is when you have a job. Let's go deeper. Hey guys, JD here. So, I am not an economist nor a financial advisor, but I do watch and pray more than I would say the average person. I watch the economies of the world to see what's going on, because if you follow the money, typically you can have a stamp on what's going on. But if you just put layoffs in a Google search, just the word layoffs, let's just look at this. Stellantis Ford announced more layoffs from UAW strike. Geico plans layoffs to let others go. Nokia layoffs. Big banks are quietly cutting thousands of employees, and more layoffs are coming. So listen, I'm not here to try to scare you. I'm definitely here to try to help. And layoffs are coming. Hard times are coming. Americans kill me because they think like we're going to be king forever. If countries could stay kings forever, then Rome would still be in power. Okay, then Egypt would still be in power. This happens every 100 years. We've been in power 100 years. Our time is running out. The dollar is getting weaker and weaker. When I first started this channel, I started to try to teach people about Bitcoin, because if you really look at what's happening in the world, the system that we've all grown up in, the system that we all know and don't know anything else, is crumbling before our very eyes. The financial system is what I'm talking about, is crumbling. The U.S. is in a trillion. We're in trillions of debt. You don't get out of debt when you go down to trillions. Okay. Other countries are moving away from the dollar. They're selling the dollar and going to other currencies, also going to cryptocurrencies, which is why I started this channel, trying to get people to buy some Bitcoin. But listen, I'm telling you right now, the dollar is probably going to crash. I know you don't believe me. Just buy a little gold. Just buy a little silver. The only real money is money you can hold in your hand. So just get a little gold, a little silver, some toilet paper, stuff that you can trade, stuff that you can barter. Okay, it could get that bad that we go back to the barter system. But if you prepare yourself ahead of time, I'm showing you what's coming. If you read the news, it's coming. They are actually telling us what's coming. So you can prepare yourself a little bit by buying a little bit of gold, buying a little bit of silver. Hey, how about that thing called Bitcoin? Because that's where we're really headed. We're headed to a digital currency. They're going to crash the financial system as we know it, and then we're all going to be on a digital currency. They're probably going to have some kind of US coin. I know China already has their coin. These digital coins are coming, but Bitcoin is going to be like the gold amongst the digital coins. That's why I've been telling people, get you some Bitcoin. When I first started this, I drew these boxes from my trading school. I drew this box myself. I would say Bitcoin was like, we was bought in this area, somewhere over here, right? I had this white box was empty, this green box was empty, this purple box was empty. I was telling people I had the Bitcoin bottom at 13,000. I was a little off. The bottom was actually 15. Pretty close though, right? Since then, I've been telling people seed time means to buy. So we're in seed time again, where it's time to buy. But if you had a bought when it was 15,000, you've already doubled your money. It just hit 30,000 a day. It pulled back, but it hit 30,000 a day. Look at this date here, April 24th. I have this as the Bitcoin halving, where every time they hit the Bitcoin halving, it takes off. So here's your harvest after April 24th. If you've been buying Bitcoin all this time, a little bit at a time, every check, just like you do your 401k, which was my suggestion, it's called dollar cost averaging. Then if you had been doing that, you would have been ready for this. Also, I drew this simply by drawing a field. Okay. But let's look back in history real quick. Look at this. Bitcoin made a new high. came down, ran through the boxes, Bitcoin halving, explosion. Let's go back some more. Bitcoin was in the boxes, ran through the boxes, got to the Bitcoin halving, explosion. Okay, I'm giving you historical data on Bitcoin. This is what it does. Let's see where we are at the Bitcoin halving. Look, people, they have a countdown for this, okay? They actually have a Bitcoin halving countdown, because those who study financials and study Bitcoin know every time we hit a halving, it explodes, okay? And here's why. Block halving events happen every 4 years on Bitcoin blockchain. Bitcoin's initial block reward was 50 BTC. The current block reward is 6.25 BTC. The next block reward will be 3.125. This lowers the rate at which Bitcoins are generated. The halving is periodical and is programmed into Bitcoin's code. Let's get to the why. Conventional fiat currencies, which are crumbling, allow governments or banks to print money and cause inflation. Oh, yeah, we know. In Bitcoin's case, the total supply will be maxed out at 21 million. Printing extra causes inflation. If there is no extra money printed, the value of Bitcoin should increase as demand will rise. More people will start to use Bitcoin and supply will lower or stay flat. No more Bitcoins are printed. This makes Bitcoin similar to gold, as I just said, which has limited supply and cannot be printed or artificially created. Bitcoin is your safe haven. I'm just telling you, get a little Bitcoin. All right. So I had to give all my spills there. So that brings us back to trading. Okay. Today we were looking at the Euro USD. This will be the work study lesson for today. But I have to say, the layoffs are out here. They're increasing, and a lot of people are going to run to try to learn how to trade. Right. And so I'm going to tell you the truth. That probably will be a mistake. It probably would be a mistake. Trading is too hard to learn, to try to learn it under immense financial pressure. Most people aren't going to tell you that because they're just trying to sell you something. I'm telling you the truth. If you try to buy my course when you're laid off, it's still good information. You could still happen, but I'm trying to tell you, trading is hard when you got everything going for you. When you have excess money to blow, it's still hard to learn. It's a real skill. You know what I'm saying? It's like getting a 2-year degree, not necessarily 4, definitely 2. It's like going to 2 years of college, because that's probably what you're going to have to put into it before you even see any real results. I'm just keeping it real again, because I don't want people to, be under immense pressure. You're taking your last to try to buy somebody's course or buy somebody's program or follow somebody's signals. You're trying to, you're spending your last, and then you still have to make a deposit to even trade with. So learning how to trade, or trying to learn how to trade when you're under immense pressure, financial pressure, it's a bad situation. It's just bad. I would much rather for people to, as you are still okay right now, you still got your job. You may not be making what you want to make, but you can make the sacrifice to get the information you need to make your deposit, to start trading. Because I'm just saying, people do this all the time, and I just don't want to see people throw their money away, because even when you start trading, you need to be on demo for a certain amount of time. Then when you go live, you need to only be trading $1 or $10 to get used to risking real money. So there's a process to trading, and you can't just rush that process, or you're probably just gonna blow the account out. That's just how it is. But what I would say do is get ahead of the game. The best time to start to learn to trade was yesterday. The next best time is today. If you still are employed, if you still have means, then now is the time to begin to learn how to trade. Okay. For those of you who are watching this channel, you are blessed. I'm just gonna put it out there. You're blessed because you found price action, and you found a price action teacher. Man, I'm telling you, if I had found price action and a price action teacher when I first began trading 15 years ago, I will be rich. I would be rich right now if I had been trading price action for 15 years. So for those of you who are just finding this channel and just finding price action, or you just started trading and you found price action first, you are blessed. I'm not playing. I'm so serious. For real. For all the stuff that I went through to find price, you know what I'm saying, to find price action. For those of you who found price action out the gate, I'm jealous. I'm downright jealous. All right, let's jump into this. That was my spiel. I think I didn't bait and switch you. I think I talked about layoffs and why it's important to start trading now. So I'm sorry, I couldn't see what was over here. I'm pretty sure it was a high, then a lower high. So you take this first one or the second one, you are good. That was a home run. All right. So then when we get down to the bottom here, this isn't really a higher low, because this low here this is the low. So the higher low doesn't come till way up here. So there's nothing you can do. Then you get two legs back. Now you could consider this a low, push up, higher low. You could. And if you took this, it would have worked, but that's a bad signal candle, so I can't mark it. But then this is a low now. Then you push up and get a higher low. Now you get a beautiful signal candle closed on this top. And also you seen warning shot, warning shot, warning shot, warning shot, warning shot, warning shot, not to go low. You got plenty of signals to go higher. You take that, 1, 2, 3, good trade. But then up here you get another low, push up, higher low, but we're too far away from the EMA. And also this was a humongous push down. So from here you can kind of see 1, 2 legs up already. So you got to start being careful. So you can't take anything in here. And then here you come down, look at this warning shot. So, you know, I'm not taking this just based on this warning shot. Not to mention we just saw that this is a huge run down. This is down pressure. So if you're gonna basically counter trend trade, the first and second trade is you're only gonna get about 2. So I wouldn't suggest doing anything long in this area. And then if you actually count from here, you get a first entry, second entry short. I could have marked this one, but since this signal candle didn't break lower, I didn't. But that's exactly what you get from down here. First entry, second entry short, and it works like gangbusters. Boom, drops down. You can't go here on this high, push up, lower high, because it's a little bit too far away from the EMA. And again, you want your lower highs and higher lows to be closer together. This one is too far apart. Now, if you had drew a trend line though, what you would see is the rule of 2, trend down, and the zigzag shows this for us. Trend down, trend break, retest the new low. Perfect price action. Rule of 2 right here. Market cycle right here. Perfect price action. All right. And now you get the new low. So what you got here is a trend down, trend break, 1, 2 legs down to a new low. So now going long is much more appealing. And you get a first entry, right? You get a second entry right here. Count from the top. First entry, push down, second entry. You can take this one, or if you wanted a little more confirmation, you can even take this one. It's even more, they're both hammers. This one just looks better. Either one works and you're off to the races. That's a good second entry long in a downtrend. Because also, let me point out, you saw the 2 legs down, rule of 2. So you know we're going to head up a little bit. This is what you learn with price action trading. Also, the EMA was a mile away. We know that the EMA is the moving average price. Therefore, we know we're going to snap back to it. This is one of my favorite trades because I got so much going for me. I got the market cycle played out. I see a rule of 2. I see 2 legs down. We got a new low in place, which is another signal that we're going to go higher. I got a beautiful signal candle closed on its top. The EMA is a mile away. I mean, this is an A+ trade right there. First entry, second entry long, a mile away from the EMA. That's an A+. All right. But then we run up, and of course, this higher low, again, too far away. Can't take it. Too far away from EMA. Can't take it. Good thing you don't, because you are trapped. So that push up was very short lived. And then we push right back down very strong. So when you see this strong push back under the EMA, see, the EMA shows you, man. The EMA is your friend. Right back down under the EMA, and you know you're in a downtrend. Yep, look for a short. We push up. We trap everybody who's going long here in a downtrend. That's why you got to be careful when you go long in situations like this. You break higher, right off the EMA, almost a falling hammer. I like it. You take it, boom, it's off to the races. Then you get a high, push down, lower high that's much closer together. And you're closer to the EMA. This one you can take, boom, home run. Then you get another one, high, push down, lower high. At this point, you know you're trending. You don't have no target though, so this one is risky. I would much rather target because see, you already hit this target. This one is risky, but it does work with a comeback win. Okay, so now you kind of can see that you've made 2 legs down, really 3 legs down, and we got a new low in place. So again, we're probably gonna go a little bit higher. So you don't do anything here. That's just a first entry. Push down. You got a matching bottom here, another matching bottom pushed up. So now I'm watching at least. So now I got a low, push up. I got a higher low. This one I made light blue. You might can't tell. It did break higher than the one to the left, but it left you a lot of stem. I don't like stem. I probably wouldn't take it, but if you took it, I get it, and it would have worked. Coming through here, you got warning shot, and then a big down. So mixed messages. Then look at this warning shot down, then it back up. Stay out of this. This is just congestion, mixed signals. So you don't do anything here. You don't take this high or low. That's terrible signal candle. You just stay out of all of this. But then you get kind of a new high. You get a first entry, push down, second entry, long. But the long doesn't trigger until this breaks higher because you got a warning shot, mixed warning shots. So it's like, ugh, what is this? But then when this candle comes up very strong, closes above the EMA, and you can see 2 reds down. Look at this row. 1, push up, 2. You see 2 rows back. They're small, but it's basically this. You close higher. I like that one. 1, 2, 3. Now you get a low, push up, higher low, a little bit closer to the EMA, a little bit closer together, like we said, and you get a nice strong hammer up again. I like it because now we're saying we're probably coming to test here and here. I like this one, and boom, that's exactly what it does. Comes to test that area. But here you get another low, push up, higher low, terrible signal candle, can't take it. And then you get a low, higher low. I don't like this one, too much stem, can't take it. And we hit this target and we're almost to this one. So you just have to sit on your hands through here, and you miss this little push up, you just miss it. And then you get another high. Then from this bottom, you probably got a first entry, push up, second entry short. That works again. So, you know, if you counted that, you could have took this, or actually I missed this one. You got this high, push down, lower high. You could take this one right here. I didn't see this. I missed this one. You could take this. It closed lower, strong candle. Your target is down here. You take that. Easy money. But then it pushes back up on you all of a sudden. Here, I'm probably sitting on my hands because I'm thinking we about to go lower. I don't know when, but I'm probably doing nothing through here. See, we get the low, push up, warning shot, don't go long, warning shot, don't go long, so we can't go long. But then this one barely closes really doesn't close under the EMA. If the EMA is straight across, I can't go short either right here. I just can't do nothing. And then it shoots up again. But then you get a high, push down, lower high, but also on this strong push up, we couldn't make the new high. That is the sign we are about to go short. And really, if you count from the zigzag right here, this is the first entry, boom, second entry short right there, if you're using the zigzag as a guide. But here we do get the high, push down, lower high. Look at this signal candle, crushes through the EMA, closes on its low. I like that because your target is here, here, and here now. This is a beautiful entry, and it is a home run. But now look, you got the high, lower high, way too far away from the EMA, way too far apart. So you can't even count that as our normal lower high that you would take. So you got to sit on your hands here, sit on your hands here. You miss one here, but it's just too far away, just too far away. And you've already made the new low. But then once we shoot on down and get the new low, we're nice distance from the EMA. It's kind of the same situation as over here. We can clearly see 2 legs down to a new low. So I'm looking at this as a first entry, boom, second entry long. I'm a mile away from the EMA. I love that situation. Even in a downtrend, I love that situation when I can see a second entry that's a mile away from the EMA in either direction, going short or long. I love this situation because I understand through experience of trade and price action that the EMA is going to act as a magnet because it's the average price. So when you're in this situation, it's gonna snap back. It's probably just gonna snap back just like it did here, just like it did here. These are A1 trades, even though they're typically counter trend. Man, they work. They work. Anytime you can enter with a second entry and you're a mile away from the EMA, it's a pretty good look. So that's what I saw today. This was hard trading. Okay. Sorry if I went through it a little fast. You guys can always rewind, but this is considered hard trading because it was hard out here today. And that's why trying to learn how to trade under immense pressure, it's just not going to work out. You know, the best time to learn how to read a price chart is today. This is why we have to be marking up our charts. You have to go about this as a business and a true skill that you're learning, and truly try to get better by marking up your charts and looking at, looking at entries. If you want to mark up your chart and send it to me, send it to my email, that's fine. And I'll let you know what I think about it. I'll let you know if I think some entries are good or bad. If anybody wants to do that, if you want to kind of double check your work, no problem. Send them on to my email. It's in the description, and I'll take a look for you. Or if you lose a trade and you want to know what went wrong, send me a screenshot of it to my email. Hey, I'll take a look at it for you and tell you what you may have missed. I'm here to help. So again, the best time to learn how to trade is today. Don't wait until it's too late. All right. So that is the lesson for today. Please like, subscribe, and share. Thank you for everybody who wrote in the comments yesterday. Hey, we're going to keep it going, and I appreciate you guys. So I do have a trade example for you. Let's jump right in. Don't want this video to be too long. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. Hey guys, how's it going? It is October 20th, 2023. We're looking at the Euro USD. It's been in a serious downtrend. We had a trend down. Here's a trend break. 2 legs down to a new low. Came back up. Then another 2 legs down to a new low. So we just entered right now, expecting that we're at least gonna come back to the EMA. We just bounced off of this bottom, rejection. So we're hoping that we're gonna come up, get above the EMA, and make an attempt back higher from this point. 3 minutes, we'll see what happens. Good first candle. If we can get to the EMA and stay above it, we'll win this trade. That's really the key when you take this setup. Low. That EMA, if you bounce hard off the EMA, you're kind of in trouble. But if you can get above it or stay near it, you're in good shape. This is not what we want to see. That little stem is a bounce. A lot of times in this case, it'll make another low, higher low. So this doesn't surprise me either. The next candle could definitely shoot up for us, making another higher low under the EMA. Final candle. If we get the higher low here, another one, we could enter again. No surprise. This candle can close up here. We will actually have another entry. It's gonna leave us too much dim. Oh, that's a warning shot, another warning shot. Oh, it's scaring me. That was pretty good close, but it scared me right at the end. I'll take my good win for now. We'll let it get above the EMA and then enter again. Oh, I forgot I entered that candle late too. We ain't won yet. I entered it that late? I was just sitting down. How much time we got left? This thing is on 5 minutes, people. That is not good. I did not know that. You got to check your numbers before you just jump in trades here. That's what happens when you just sit down and jump into a trade before you check your numbers. Who changed my stuff to 5 minutes? All right, final candle here. Final candle. Good thing I made a good call. And we could have entered here again. We got 45 seconds. It's getting the bounce off the EMA. We gotta hold on here. 39 seconds. Don't you do it. Don't you do it. Rejection, rejection, rejection. Rejection. Got 22 seconds. Rejection. Okay, good rejection. Come on, rejection, rejection. We got 10 seconds. Rejection. Don't you do it. We got 5 seconds. Good gap up for me. 1 second. Woo! Yeah, I'm gonna take a break. That was rough. And this is a first entry, second entry short now off of a strong push down. So we definitely have to wait for a better market condition. We'll come back.
We would like to thank you for tuning in to another Increase episode with JD. If you want to learn how to price action trade, please visit www.jdhyder.com and you will find his brand new course, IOTS, Price Action Trading System. We thank you again, and as always, we wish you increase on the sudden.